question 3. ISA240, the auditor's responsibility relating to fraud. So, you were recently appointed as auditor of PCP Pty Limited. So recently appointed, I'm now thinking, what have we done today? Well, we've done CPC in terms of new appointments. So that's now something to consider. And with my back history, I know that this means that this is pre-engagement. This is a new client. It is a private company, so less requirements per the Companies Act. A large company that operates countrywide. So they operate countrywide, which means they will have maybe multiple factories, maybe multiple franchises. This is just something to consider at this point. The company leases out and sells construction material. So they lease and they sell. So I just want to put here, there's 2 revenue streams here. There's one for leasing and there's another one for actually selling. So here you've got revenue, here you've got rental. Here they still own, here they have sold, given away the rights to that asset. So they lease and sell concrete mixers and hardware tools. 80% of the shares in the company are owned by builders' family, all of whom are directors of PCP. So what I can see here is we have got an owner managed. Most of, or 80% of the shares are owned by the family and all of them are directors. So the shareholders are directors, owner managed. I know this is a big concern for fraud. The directors are paid an annual performance bonus based on the financial statements. So here again, bonus based on financials. Here is an incentive for fraud. I want my financials to represent great cash flow, great assets, great profits, so that we get bonuses on those. The company's bank has insisted that the company be externally audited if PCP wishes to retain its financing facilities with the bank. So, the bank is saying they must be audited for them to retain their financing facilities. They want these financing facilities. And so once again, here is a pressure to keep this facility. PCP is a subsidiary of CCP Limited, a company operating in the same industry. So now you've got CCP, PCP, and they are in the same industry. So there's potentially that they trade, and if they do, related party transactions, there is once again an opportunity for fraud. Required, identify the fraud risks in the scenario. Okay, so basically it was easy enough to do that now because we've just addressed these specific topics. But the important thing here is as you're reading this information, you're critically analyzing the information. So as I'm seeing that there are newly appointed, I'm thinking pre-engagements, I'm thinking CPC, I'm thinking, opening balances because I was not there in the prior year. Could there be misstatements in those opening balances that I now use in forming my opinion at the end? I'm seeing there's revenue, there's lease, and I'm seeing that they have bonuses based on financial statements. So already I know that there is a fraud risk when it comes to recognition of revenue. Now I'm thinking, oh, there's additional risks here because of that. There's also the opportunity to maybe put leased as revenue to once again increase revenue. So not just the standard risk with regards to revenue, there's an additional one here because they also lease and they might just say they actually sold this when they shouldn't. Vice versa, if it so impacts the financial performance for their bonuses. So I'm using the information that's there and I'm trying to connect it to what I have studied. Let's have a look at the solution. And there we've got them. Recently being auditors, so they might intentionally misstate because they know that we have limited knowledge. Selling and leasing, they could manipulate revenue to overstate it when it was actually leased. Domination by the board and ownership, opportunities to manipulate. Same additionally with ownership. Bonuses, they can misstate, there's incentive. Bank is needing them, so there's pressures or incentives. Related party transactions, there's opportunities. Okay, so nice and simple. The questions you guys can expect, guys, basically identify and discuss and apply the requirements of the SACA Code of Professional Conduct, the Auditing Profession Act, the bylaws, the URBA rules regarding improper conduct. So basically, it's just about being able to pick up in a scenario that there are concerns with their professional conduct, whether it be a CASA or a CASA registered auditor, and then identifying how to apply that to the actual legislation or regulation. In terms of ISA240, it could be more audit process related, so identify the risks of material misstatement specifically with regard to fraud and then responding. So in the planning stage of the audit. All right, that's the lecture, guys.